Welcome back to my channel, guys. This time around I want to talk to you about stock investing. In Jamaica we have a very active stock market, the Jamaica Stock Exchange. When you purchase stocks, you purchase shares in a company, and by purchasing shares in a company you become part owner of that company. For the purpose of this video, I want to make it clear that stocks and shares are the same thing, so they are used interchangeably. So if you hear me say stocks, I'm talking about shares, and if you hear me say shares, I'm talking about stocks. Mean the same thing. Jamaica has a very active stock market, the Jamaica Stock Exchange. And when you purchase shares on the stock market, you tend to benefit in two ways. You benefit from capital gains and you benefit from dividends. Now, some companies will pay you dividends, other companies will not. Dividend shares allow you to earn or benefit in two ways. The company will pay you a dividend or a portion of its profit on each share that you own in that company on a periodic basis. Periodic meaning monthly, quarterly, semi-annually, or annually. The other means to benefit from purchasing stocks on the stock market is through capital gains. And capital gains basically speak to you purchasing a stock at a particular price and the value of that stock increases, and therefore that increase is referred to as capital gains. Now, dividend stocks allow you to benefit in two ways. So you may benefit from the dividends that the company pay you on a periodic basis, or you may also benefit from capital gains. However, the only way to benefit from capital gains would be to sell your shares in the company or a portion of your shares in the company. There are two types of shares when it comes down to dividend paying shares or dividend paying companies. They are preference shares and ordinary shares. Preference shareholders usually receive their dividends or their payments of profit before ordinary shareholders. So if you own preference shares, the company will ensure that they pay you your profit after they have tallied or calculated their profit before paying out any profits or dividends to their ordinary shareholders. Two dividend paying companies on the Jamaica Stock Exchange are Salada Foods and Fesco. Salada Foods are the manufacturers of Mountain Peak coffee. You don't know, they have that like a blue sachet, and they also have jars of coffee. They do other products as well. Fesco, Future Energy Source Company Limited, is that same gas station which you go to purchase your petrol for your motor vehicle. Non-dividend paying companies include Jamaica Producers, and Jamaica Producers are responsible for example, St. Mary banana chips. There's other non-dividend paying companies such as Key Insurance, and I know that these companies are non-dividend paying and dividend paying because I invest in these companies. There are several companies listed on the Jamaican stock market which you can invest in. The more stock you own, the more you will earn cumulatively. The decision to pay dividends is usually decided upon by varying factors, and this decision is taken by the board of the directors. So the company's board of directors will come together and say, okay, we made a profit of X amount, and as such we will pay our shareholders X amount per share. Now, the term shareholders is used to refer to people or individuals who own shares within a company. A key factor in creating wealth with stock trading or stock investing is volume. Volume speaking to the amount of shares that you own in the company. So the more shares that you have in the company, the greater the chance you have for creating wealth. Let's take, for example, you purchase 100 shares in a company at a certain value. Let's take, say, $10 per share. If each of those shares increased by $1 and you own 100 of those shares, then 100 times $1 would be $100. So your gain, capital gain, would basically be $100. So that is how you arrive at capital gain. However, it is important to note that the stock market and stock trading investing, you can make money and you can lose money. Even if you receive dividend payments, your shares may still lose value. Now, for stocks which are non-dividend stocks, you only benefit in one way, and that is through capital gains. Now, how does stocks arrive at their value? So at any given point during trading, and there are specific days for trading on the market, there are buyers and sellers in this marketplace. As it says, it's a market. So if a seller is offering a stock for a particular price and you have a willing buyer that will purchase at that price, then at that given point in time when that trade occurs, the stock is valued at whatever that trade price is. So if you decide to offer a stock for sale for $10.10 and you have a willing buyer who will purchase it for $10.10, that stock now values $10.10. Then the stock price is determined by that trade at that given point in time. So there are buyers and sellers on the market, and if you offer a certain price and somebody is willing to purchase it at that price, then that is now the new value for the stock. Alright guys, let's look at some examples. So Jamaica Producers JP, I paid an average of $22.32 per share for a Jamaica Producer stocks, and now it is sitting in my portfolio at $22.99 per share, which therefore means I have capital gain of 67 cents per share. And to point out, Jamaica Producers are not dividend paying stocks. There's no dividend to be gained from Jamaica Producers. Let's look at Fesco. For Fesco, the average price that I've paid for each share is $5.01. As it is right now, the average cost per share is $4.98, which means that I have lost 3 cents per share. However, Fesco has paid me a dividend of $10.57. Let's look at Salada Foods. I purchased Salada Foods at an average of $7.48 per share, and it is now sitting at $4.17 per share. So I basically lost $3.31 per share. Yet Salada Foods at the end of 2022 has sent me a dividend check for $102, which takes me back to the point that with dividend paying stocks, you benefit in two ways. You benefit from capital gains and you also benefit from dividends. But in this case, even though I have not gained but lost in terms of capital, with Salada Foods, they still sent me a dividend payment. With dividend shares, you're expected to receive a percentage of the company's profit whenever they decide to pay a profit, or they decide to pay a dividend rather. And with companies that are non-dividend paying companies, you will benefit from capital gain, but you may still lose value in your money if the value of that stock goes down per share from where you originally purchased it. But because of volatility, at any given point, the price or the value of that stock may increase or decrease. So it is important that you be aware that it is not about timing the market, but it is more about the time that you spend in the market. So with this, I hope that you have learned something about the stock market and how to trade on the stock market or how to invest in the stock market. So until next time,